Good morning, it's Monday. We're going to look at the Australian dollar, which has been on a really good bull run recently against all the major currencies. This is the Aussie versus the New Zealand dollar weekly chart, going back to the end of 2022. So a very significant period of time that we've been in this sideways channel, very choppy, difficult to trade, but worth paying attention because we are now about to test the upper trend line of this channel, which goes back to February 2023. What's that, 2.5 years old? It's a pretty significant trend line, significant channel. You do need to look at your longer term charts occasionally just to check where we are, just to get that bigger perspective. Otherwise, you'd have missed this opportunity. If you'd have been looking this on the daily chart or the 4-hour chart, you'd have seen this really strong rally from April. You'd think we're in a very strong bull trend. But when you look at it on the weekly chart, you suddenly realize that we're about to hit a very major resistance level. So what could you do around here? Well, the obvious trade is to sell into a short position and see if the market reverses from that important resistance level. But you would then also want to be nimble when you're trading this sort of range, be nimble and be ready for a breakout. If we were to break above the trend line, that could be a buy signal if we saw a daily close above. This is the weekly chart, so I would need to see some sort of confirmation that we are seeing a close above the trend line, but we'll keep an eye on that during the week. Anyway, I'd say the trend line is around 112.00, 112.20. Keep an eye on it, and you can decide if you want to trade this trend line. And just to reiterate how important it is to look at those longer term charts. When we're looking at the daily chart here, you are just seeing a great bull trend. Look at these green candles. There's hardly a red candle on the screen. So you really would be feeling extremely bullish. And the last thing you would be thinking about is entering into a short position if you were focused solely on the daily chart or even the 4-hour chart. So just be aware, every now and then you do need to zoom out and have a look at your weekly or even your monthly chart. I'm not one for littering my page with tools or oscillators, but I do use the slow stochastic, and I just keep an eye on it. And you can see even on the weekly chart here for the Aussie versus the New Zealand dollar since the 20th of July. So we're getting on for 2 months in overbought territory as well. Something to bear in mind, I would never base a trade purely on being overbought or oversold, but something to bear in mind as we approach that longer term trend line. Now, the Aussie versus the US has been in a very strong bull trend as well, of course, but worth noting on the weekly chart, we are about to test the 200-week moving average at around 66.70, 66.80. Now, again, I wouldn't sell the pair solely for that reason. That's the only resistance level we're hitting. We're only just entering overbought territory on the weekly chart, but it is still worth noting. I feel quite bullish about the Aussie, and I would at the moment still be looking to buy into any downside correction. That's the daily chart. So you can see we've broken out of a consolidation range. I would say the peak of that range was around 66.00, and you can see we were getting down as low as 63.60. But because we've broken above these peaks, I could even draw a trend line here to show you where the real break point for this rally was. There you go. That's pretty clear. In fact, I'm going to put that on the 4-hour charts just to really zoom in and show you how we broke above that trend line. There we go. There's the trend line. You can see we had a break. Okay, we had a false break. That was really tricky. I've got a feeling I got caught on that actually. But then on the second retest of the trend line, we have rocketed from there. So I'm going to stick with the bull trend in the short term. I'm wary of that 200-week moving average, but for me, it's not enough to get into a short position just yet. Although I am wary of this double top. So we do have a potential double top pattern. As you can see, we are hitting 66, 67. We've basically touched that 200-week moving average and reversed. But we've had a bounce back from the first support, the 23.6% fib at 66.28. Now, just because we're hitting the 200-week moving average does not mean that we're definitely going to collapse. It's more likely we'll just consolidate around the highs, consolidate that very strong bull move, and maybe we need to pause before we break above the 200-week moving average. Anyway, I'm just guessing. I don't try to predict. Nobody knows what will happen. But it could be a scenario where we range trade in between the first support at 66.30 up to that 66.70, 66.80 area. Currently, that is what we're doing. I was getting into a long position down here actually on Friday, and we've had a nice little bounce. What can I say? This will still be a good support level around 66.30, 66.20 if it's retested today or tomorrow, I think. We have the trend line going back to the 5th of September. Okay, it's only a week or so old, but still worth paying attention to. We've got a short-term fib here at 66.28, which I've got from from isolating this very last move up. So for me, as long as we hold 66.20, the bulls remain in control. Break below there would likely trigger a further short-term correction, but I still wouldn't necessarily be looking for a reversal of this bull move just yet based on the 200-week moving average. I would want to see some candles. I would want to see a pattern that would indicate to me that it's completely over. Even if this is a small double top, the projection for the downside would only be as far as 65.85, 65.70. Yeah, I'm going to call it down there. I would be looking to get into a long position. Okay, I've given you a few scenarios there, something for you to think about. But for me, the key, the beginning of the week, will be the 66.30, 66.20 area. And of course, don't forget that we've got the Federal Reserve meeting on Wednesday, Thursday. That could move the markets if we don't get the expected 25 basis point cut in the Fed funds rate. Okay, I think that's it. Hopefully that's helped you. Please do tune in tomorrow and I'll see what else I've got for you.